Bitcoin crashed below 60K for the first time this year. Immediately, two opposing camps emerged. One side, 60K is buyable for long-term strategy. Other side, this could be the beginning of a deeper collapse. Nobody can time the exact bottom. History proves that nearly impossible. But because everyone waits for lower prices, many investors miss the best accumulation phases. Bitcoin follows a predictable four-year cycle. 2 years of accelerating gains, 1 year of explosive price action hitting new all-time highs, then 1 year of complete collapse. We're likely in the collapse year now. By 2027, Bitcoin could begin recovering. By April 2028 halving, Bitcoin could reach new all-time highs. So further price drops aren't shocking, but the most pessimistic phases are when long-term investors accumulate. First signal, Bitcoin cannot reclaim the critical resistance zone between 67K and 77K. Every bounce attempt gets rejected. When an asset can't reclaim old resistance, sellers control the market. Second signal, recent bounces show only 3 waves, not 5. In real bull markets, rallies must form 5-wave structures. 3 waves are just corrections within a larger downtrend. Third signal, the downtrend is accelerating. Lower highs, lower lows. This is the definition of an intact downtrend. In an intact downtrend, FOMO buying is betting against the trend without confirmation. Elliott wave analysis suggests we're in wave C, the final leg down. Wave A completed when Bitcoin crashed from 126K to 78K. Wave B was the recovery to 88 to 93K. Wave C is now unfolding, targeting between 39K and 55K. Multiple analyst projections using Fibonacci extensions show target zones between 39K and 55K depending on scenarios. 65K if institutional flow stays strong, 55K baseline, below 50K if macro shock occurs. On-chain data reveals over 50% of Bitcoin supply is underwater. Historically, when this ratio exceeded 50% in 2015, 2018, 2020, and 2022, Bitcoin was at or near the bottom. This shows long-term investors quietly accumulate rather than wait for perfect prices. The RSI indicator on daily chart is at extreme lows, readings rarely seen in Bitcoin history. Previous instances of such deep RSI occurred near attractive valuation zones for multi-year holding. Scenario 1, if market continues declining to target zones, accumulate at 50K, 44K, with reserve capital for deeper levels. Why? Bear markets tend to go further than expected. 2022 proved 30K wasn't absolute bottom, it went to 16K. Scenario 2, if market forms a 5-wave reversal early and recovers, that's technical confirmation of local bottom. Wait for the subsequent 3-wave correction for the best risk-reward entry point. Scenario 3, if you already hold Bitcoin at losses, assess whether your position is sustainable long-term. If yes, don't let volatility force wrong timing. If excessive pressure exists, cutting some to re-accumulate lower is more rational. Dollar cost averaging is recommended for this phase. Instead of timing the bottom, divide investment and buy consistently at 60K, 55K, 50K, and 44K. This won't catch the lowest price but prevents all-in mistakes. 3 non-negotiable principles. First, never put all capital at one price. Second, don't use leverage in bear markets unless professional. Third, honestly ask, if price drops 40% more, can you tolerate it without panic selling? The real question isn't whether 60K is cheap. It's, am I acting based on data and a plan, or from fear of missing out? Bitcoin's biggest winners usually act least during chaos. They had a plan beforehand and waited. In 2022, when Bitcoin hit 16K, sentiment wasn't different from now. Everyone said Bitcoin was dead. Less than 3 years later it hit 126K. History never repeats exactly, but it often rhymes in familiar ways.